business news, we're news for business people.
Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Good morning, I'm Agam Vakil, and in the next 30 minutes, we deep dive into specific trends in the market to draw out key takeaways and its implications for investors. But first, the headlines. It's a muted Monday on the last trade as both benchmark indices trade with slight pressure, while broader markets outperform. The BSE small cap gains almost 0.5%. And bond yields fall further as investors cheer the ratings upgrade. Ambuja and Ultratech Cement are the worst Nifty performers today after the Supreme Court refuses to stay the ban on Petcoke use in northern India. And Biocon gains as much as 5% after its Bengaluru facility gets an all clear from the US pharma watchdog.
All right, let's first take a look as to what the markets are doing. Clearly, it's been a muted start today to this new week, and also Nifty has been trading in that very narrow range, currently down about nearly 6 points. Remember, the Nifty has been trading below its 20-day moving average so far of 10,306, and it is trading below the 10,300 mark. That's the Nifty contribution list there on your screen. Contributing to today's gains are the likes of HDFC Bank, L&T, Kotak Mahindra Bank, as well as IndusInd Bank. Clearly, the list is being dominated by the private banking space today. On the losing side, ICICI Bank, State Bank of India, Infosys and Ultratech Cement are the counters which are dragging the index lower. So clearly it looks like the day of financials. Let's also, if you're talking about financials, take a look at Bank Nifty, which has been pretty strong in the past few sessions. Remember, on Friday it touched its record high levels, but it's been muted so far, and especially the Nifty PSU Bank has been the one which is trading weak. That's your biggest sectoral loser also for the day, and the Bank Nifty is just about trading flat to negative, but Nifty PSU Bank down almost 1%. In terms of sectors, you've got the likes of auto and FMCG, which are still holding about in the green. Let me just take you through a couple of Nifty gainers. Bharti Infratel, Yes Bank, GAIL are your top 3 Nifty gainers for the day. And on the losing side, you've got stocks like Ambuja Cement, ICICI Bank, as well as Ultratech and Hindalco, which are trading weak. And clearly, Agam, the broader markets are outperforming today. Even the advance decline ratio is in favor of the advances so far. Right,
very not unlike what we've seen on Friday. So let's pull up some of those gainers in the broader markets. Wakrangri, it's up as much as 3.3% right now, and we also have gains coming in Tata Global Beverages. Of course, we've also had a few long calls initiations since morning by a lot of analysts who come up on this on this publication, and up as much as 2% there as well. We have gains in Blue Dart up 2%, NCL India along with GMR Infra is also gaining as much as 1.8%. On the losing side, Ramco Cement down by as much as 3.3%, following its larger peers downwards. We have some weakness in United Breweries, which is also down as much as 2.3%, followed by some amount of weakness in GE, T&D, as well as Reliance Communication. But on the whole, when it comes to the broader markets, it's not such a bad picture.
Okay, let's move on and tell you what's there on Trend Spotting today. Well, we put the spotlight on what is making Vinati Organics gain as we connect with the Executive Director of the company, Vinati Saraf Mutreja. We also discuss the impact of crude price hike on the paint companies, and we'll also look at explosive data demand which is there in the telecom space. But before we go across to any of these trends, this news which has been hogging the limelight today, and you can see the impact coming in for the stock prices of most of these cement companies which have exposure in North India, and they have run into rough weather with the Supreme Court banning the use of petcoke in the region. And in fact, the ban has come in the regions like Haryana, you've got Rajasthan and even Uttar Pradesh. But to get more details of it, how does it impact companies which have exposure in the northern area? Nikki Merchandani joins us with the list of all those companies. Nikki.
Hi, so the ban has come through in the 3 states that you've mentioned, Navneet. Earlier the ban was just limited to Delhi and NCR region, but now it's completely imposed on these 3 states. The Supreme Court will now hear the cases going forward only on December 4th, and the north-based companies, as you just mentioned, tend to get impacted the most with this development. The pressures to be felt by the north-based players like Shree Cement, JK Lakshmi Cement, JK Cement for that matter, because these guys are more dependent on petcoke, and also they have their plants which are in the affected area where the ban has come through. Also, other states may follow suit, because SC has also suggested that other states should consider imposing a ban, given that the pollution issue is just not limited to the NCR regions. Because the industry will slowly shift from petcoke to industry to the international coal, or for that matter domestic coal, which will in turn lead to more cost pressures for these companies going forward. Now Kotak says that the power and fuel costs for this matter after this development, if the ban comes through and there is no relaxation whatsoever, will increase by 10 to 15%, whereas IDFC in its report says that it could go as much as 20 to 25% higher. IDFC also says that Shree Cements has a total of 77% of its capacity, whereas power and fuel cost is expected to rise 20%. Ultratech has 19% of capacity in the affected area, and the power and fuel cost is expected to increase by 4.5%, whereas the the Ultratech Cement and ACC and Ambuja Cement, the pan-Indian players, they have relatively low capacity exposure there in the range of 12 to 14% in the affected areas, and the power and fuel expenses for these companies are expected to rise as much as 2 to 3%, Navneet, for that matter.
But Nikki, there are players who also stand to benefit from that move.
Right, Agam. So if we're supposed to look at the players which are unintended beneficiaries of this move, or at least over the short term, if the petcoke prices were to come down, then we'd see south-based players like Dalmia Bharat, Orient Cement, India Cement, which also has a plan, but then still will tend to get benefited by this move indirectly, and are relatively better placed as compared to your pan-India players and north-based players. Now, Coal India is also expected to benefit out of this move, since the industry will gradually shift from using the petcoke to your domestic, or for that matter international coal, which would see higher e-auction coal with better realization for that matter.
Thanks, Nikki. Well, the company which is impacted the most from this news is Shree Cement, because it uses petcoke 100%, and the volumes that it derives from the northern region is almost 75%. Earlier today, we connected with Prashant Bangur, Joint Managing Director at Shree Cement, to get his views on how bad the impact would be. Listen in to what he had to say.
We will no longer be able to use petcoke in the cement and the power side. So we'll have to switch to international coal. As per cost, your estimate about 10 to 15% is more rational than about 20%. So net impact on the margin again is very dependent upon the selling price of cement. Being a commodity is very difficult to predict.
Well, those are the views coming in as far as the cement industry is concerned, but we're going to move on into something more interesting, and this is the trends in the chemical space. Well, specifically, to a certain extent, this has to do with the pharmaceutical space, but I'm going to talk about Vinati Organics, because this stock has gained as much as 60% in the year so far. We've seen a little bit of volatility in the recent times, but in the long run, if we pitch the margins over the last 5 years, we have seen a constant improvement for Vinati Organics. The reason why I bring out the margins in the 5 years is because Vinati Organics has a lot of plans over the next 3 to 4 years in terms of capex and commercialization of new products, which has been outlined not only in its annual report but in its recent conference calls as well. So, well, for that, we are in conversation with Vinati Saraf Mutreja, the ED at Vinati Organics. Thanks a lot for joining us, Vinati. Before I move into the plans that you have over the next 3 to 4 years, I'd just like to touch base with you on what's going on right now. Now, from what I understand is that you have seen good volumes coming in for your ATBS, but on the other hand, IBB has seen a little bit of slackness in demand. Please correct me if I'm wrong. This is because of one of your large clients in IBB that they had shut production temporarily. Can you give us as to what's going on in both these chemicals with respect to business, and how you expect this business to pan out, say, over the second half of this financial year?
Sure, both IBB and ATBS contribute to about 65-70% of our total revenues. So they are very important products for us. More so ATBS, which has about 45% share in our sales. Now in the ATBS segment, what has happened is one of our large competitors in the US has just announced that they are going to exit the business. They're going to stop making ATBS. So as a result, we have seen a sudden surge in demand for ATBS, and we are running at good capacity utilization levels. Going forward also, we are very positive on ATBS because it is used in polymers that go across industries such as water treatment, enhanced oil recovery polymers, personal care, construction chemicals, etc. As far as IBB is concerned, IBB is used mainly to make ibuprofen, the painkiller. Now, globally, the demand for ibuprofen is also growing because people's tolerance towards pain is decreasing. A lot of demand is coming from developing countries like Africa, Asia, etc. Now, temporarily, you are absolutely right. One of our large customers has taken down a shutdown, but only to increase their capacity. Therefore, even in IBB going forward next year, we expect the demand to increase and an uptick in volume in IBB as well.
Hi Vinati, good morning and thanks a lot for joining us. I wanted to check, do you have any direct Indian competitor with regard to ATBS?
No, we are the only manufacturer of ATBS in India, and yeah.
Great. So that's the product which contributes the most to your top line, and what you just alluded to, that one of the international players have said that they no longer are going to produce that. What's the kind of impact that can we see? Because you're saying the demand is going up in the second half. Do we see that contribution to your top line from this product going up? And also, if you could tell us, what's the kind of margins that you get from ATBS?
So ATBS itself will grow year on year, I think, for us at about 15-20% volume wise. Now, its share in our total revenues will remain at 45-50% because our revenues will also grow from other products. Like I mentioned, IBB will also grow, but we are also adding new products. This year, we've added 2 isobutylene derivatives that go into personal care. We are doing setting up a new plant to make butyl phenols, from which we expect total revenues of more than 300 crores. We will see the effect of these revenues coming in FY19 onwards. We are also going to get into manufacturing PAP. Of course, that will take a bit longer because that's an investment of 600 crores. That will add to our revenues after FY20. So the share of ATBS in our revenues will remain constant, but ATBS total volume-wise will grow 15-20% year on year.
Okay, Vinati, we've also seen your gross margins come off to a certain extent. Now, I also want to understand your exposure to crude-linked raw materials, because we are looking at a little bit of an uptick in crude oil. What does that mean for your top line? What does it mean for your margins? And whether or not we can expect improvement in margins from here on for the second half of this financial year?
See, first half the margins were low because of a couple of reasons. One, like I said, IBB offtake was low because of a temporary shutdown. And secondly, some of our specialty products, which are used on a campaign basis by our customer, usually see volume demand only in the second half. So anyway, second half margins will improve on account of IBB and the specialty products. Now, what was your other question?
Whether or not we can expect an uptick in the crude-linked raw materials, especially considering we are looking at an uptick out there.
Yes, yeah, crude. Yes, so most of our raw materials we are buying from refineries. So they are based on monthly prices, so more or less linked with crude. So as crude prices move up and down, our raw material prices move up and down. We have formula-based linked contracts with all our customers. So even prices of our products move in line with that of our inputs. So as crude goes up, our final price realization go up, so it affects positively on the revenues. As far as margins go, the dollar per kg margin remains fixed, whether crude moves up or down. So historically, when crude prices are low, margins as a percentage of sales are high, but when crude prices are high, margins as a percentage of sales are lower.
Okay.
Vinati, it's too early for me to ask, but you guys have already done a buyback this year. I just wanted to check the promoter stake as of now is somewhere about 73.9%. Would you like to meet the threshold of 75% anytime soon?
Well, that is always at the back of our mind. If you see, we have consistently increased our stake from 69% to 74% now. So at some point, yeah, we would be like to be as close to 75% as possible.
Okay, Vinati, a final question from my side when it comes to your future plans. Now, what we understand is that you are looking to commercialize PAP, that for our viewers, for the benefit of our viewers, that's a raw material used for paracetamol, and IBAP products in the next 3 or 4 years. Can you tell us about how you intend to, fund the capacities for these operations, and also what can we expect, say, for example, around FY20, FY21 when it comes to these products in terms of contribution?
See, PAP will add about 600 crores to our top line after FY20. The second big investment that we are doing is in butyl phenols. PAP investment is about 600 crores, butyl phenol is 250 crores. So total we have a capex plan of 900 crores over the next 3 years. So total from a 900 crore capex, you can expect revenue generation of 900 crores. Our annual cash generation is a little over 200 crores. So, and right now we have 150 crores cash in hand. We have no debt on our books. So the plan is to fund these projects through internal accruals itself. And if need be, if there's a shortage for some time, we'll take some debt if required.
All right, Vinati, appreciate you joining us today and taking us through the development at Vinati Organics. Well, that was the management of Vinati Organics, very confident of maintaining those margins of about 28 to 30%. But let's move on and discuss the other trend. Crude prices have seen an up move of almost 19.5% in last 1 year, out of which majority of it, in fact, the entire 19% has come in the last 3 months itself. With the crude price on a constant up move being a key raw material component, what sort of impact are paint companies seeing? Let's get an analyst view on this. Joining us on the phone line now is Sanjay Manyal, Senior Research Analyst at ICICI Securities. Hi Sanjay, good morning and thanks a lot for joining us. Well, we've seen a bit of impact in terms of margins coming in for companies like Asian Paints, AkzoNobel. In terms of EBITDA margins, they were either constant if you compare them on year-on-year basis, or there was a minor blip. Do you think the pressure will continue in the second half with crude oil prices going up?
Well, I think one thing is pretty clear that these companies are already working on a pretty much elevated kind of margins. If you see the last 10 years average, most of the companies, paint companies, have maintained 15 to 16% or 17% max the range. From last 2 years, because of the crude, last 2 to 3 years, in fact, because of the crude prices have remained low, these companies have enjoyed the higher margin territory of about 18%. So I think there has been this probably correction which is coming, in that sense, in last 1 quarter, specifically for Asian Paints, but we haven't seen that the pricing pressure or that margin pressure with Kansai Nerolac, which is largely into the industrial paint. So though we believe our view on the crude has remained, that it will remain at a muted levels. It will remain over the longer period of time, below $60, and that will continue to benefit the paint companies. And in the longer run, they would be able to maintain the 17% plus kind of operating margins.
Okay, since Sanjay has spoken about margins, can we pull up that the table in which we have had put up the margins, the EBITDA margins as how they panned out for the second quarter? And if you notice, you've seen Asian Paints, the margins stand at around 18.8% as against 19%. Similarly, we have seen margins remain largely flattish when it comes to Berger Paints, standing at around 15.6% as against 15.5%. Kansai Nerolac has also seen margins come off in the second quarter. And we've also seen AkzoNobel, again, looking at a decline in margins. And this is EBITDA margin trends that I'm talking about. So Sanjay, say for example, considering the fact that we are looking at OPEC cutting production. And I know that you don't track crude, but if we do see crude move up to something like a $65 a barrel, can we expect a further deterioration in margins? And in that case, how much of an exposure do these companies have with respect to either in relation to raw materials or, for that matter, sales when it comes to crude-linked inputs?
No, so raw material, obviously, it is significantly large proportion, in terms of the crude derivatives. So we believe that, the crude prices probably going up, from these levels could impact the margins for the temporary basis. We largely believe that these companies have the stronger pricing power and they would be able to, the pass the prices, the cost increase in the longer run, and they have maintained always, this 16 to 17% or, plus kind of a range for the operating margins. So we believe in the longer run they would be able to maintain these kind of margins despite the temporary pressure probably coming in 1 or 2 quarters.
Well, Sanjay, that's been the trend actually. Whenever there are cost pressures in this industry, majority of the players try to pass it off by increasing the prices. But my last question to you is, which is your top pick in the paint sector?
So we remain positive on Kansai and Aerolec, largely because the volume growth has been pretty strong. Last quarter, though a significant amount has been because of the restocking at the dealers level, but the 18% kind of a volume growth is pretty strong for a player which is largely sales is coming from the industrial side. So we remain positive on Kansai and Aerolec. It remains our top pick. We have a buy rating on Kansai and Aerolec.
All right, thanks for that, Sanjay, for joining us and taking us through the implications of possible increase in crude and its impact on paint companies. If we can just, before we move on to the next trend, pull up the valuations of these paint companies, you'll notice that Asian Paints currently stands at around 53 times its FY18 earnings, as against Kansai and Aerolec, that's something that Sanjay was talking about, that stands at around 47 times. Of course, AkzoNobel at 30 times, but it is in a slightly different bracket when it comes to the other paint companies. But with that, I'm going to move on to our next trend, and the explosive data growth in the country and the fiberization of telecom infrastructure has put the telecom equipment makers in, well, a sweet spot. Tejas Networks, which designs, develops and sells software-enabled optical and data networking equipment, is one of the biggest beneficiaries. Joining us to talk about the data boom and its plans to tap the demand is Sanjay Nayak, Managing Director and CEO at Tejas Networks. But we also have Somit Sarkar joining us to take us through the possible, potential when it comes to Tejas Networks. So Somit, well, there you have. Please take it away.
So Sanjay, we have already seen the kind of data growth that has benefited your company in the first half of financial year 2018. What is the kind of growth that you're expecting in the second half of financial year 2018?
From a growth in the macro perspective that we see, we are really in for a 3 to 5 year growth cycle for data, not just in India, but even in international markets where we play. So as a result of it, I would say that on a sustained basis, we are seeing a long-term data growth play, which is of course going to benefit our company. Coming back to your specific question, traditionally our first half and second half breakout just historically has been that the second half is slightly bigger than the first half, usually between 55 to 60% of our revenue coming second half. So I would say we would see a similar seasonality this year as well. But from a business growth angle, I wouldn't directly say that just because the data increased in first half of the year. It's just, I think data is going to continue to increase for, in fact, the statistics in India is every 9 months, the data networks are doubling in their capacity. And I would say that the effect of 4G and broadband to the home, fiber to the home is yet to be seen. So we are really, I would say, just at the beginning of the data growth cycle in our industry, both in India and outside of India.
Tejas Networks is also focusing on expanding operations in Africa and Southeast Asia. What will be the revenue breakup in terms of domestic and international business going forward?
At the end of last fiscal year, about 65% of our revenues was India and 35% was international. I must tell you that this year, India has been rated at the fastest growing optical equipment market in the world, growing well north of 15%. So we are, of course, the incumbent in India with, presence in all the operators and as well as in the government projects. We are seeing a lot more traction from India this year, not that the international is not doing well, but at the end of the year, we expect that the contribution of India will probably inch up from 65% to maybe closer to 70%, and the international will be around 30%, whereas on the absolute basis, I'm sure both of them will grow. Africa and Southeast Asia, as you rightly mentioned, are very similar markets like India. These are emerging markets where countries are thinking that the data boom and the digital connectivity is going to be the way to take the economy forward. And we are, of course, participating in building the networks which will allow countries and governments to do that. So I would say Southeast Asia, Africa, and to a certain extent Mexico and even the US will be focus areas for us, and they will again see a 3 to 5 year growth in the data that I expect in India as well.
Now your margins have been fluctuating in the past, but the second quarter was very good and stable. What is the kind of margins that investor can expect in the second half of financial year 2018?
Our margins are not really fluctuating. It's just the nature of the business that we are in. So we are in a product business, unlike IT services business. And in a product business, what happens is all your costs are pretty much upfront. And in fact, a majority of our costs, close to 75% of our operating costs, are really related to manpower, which are quasi-fixed in nature. So essentially what happens, our business is really not a quarterly business. It's like an annualized business because you invest in the manpower upfront. So as our revenues grow, and if you see the last 3 years trend line, as our revenues have grown, our operating costs are not growing at the same level because they are more or less same no matter how much you sell. And as a result, you'll see that on an annualized basis, our margins are on a sustained basis increasing. So we were at around 18% EBITDA last year. We've already crossed 21% EBITDA in the first half of this year. From a profit after tax perspective, again, we were at around 9% for all of last year if I take even the one-time charge away. And we're already at around 11.5% profit after tax for the first half of the year. It's really the nature of the business that it's an annuity analyzed business. That's what we need to measure rather than the quarterly business. So the fluctuation is not really there because, and similarly going forward, if you see since our costs are going to be fixed, rather manpower costs are going to be fixed, as the revenue increases, we will actually see an expansion in the profitability in the next few years. And we believe that another 200 basis points of increase in profitability is possible over the next 2 years or so.
That will be all, Sanjay. Thank you for speaking to us.
Okay, that's the management of Tejas. But since we're talking about telecom, Idea has been trading at days high currently. That stock's gained as much as 4%, so good going there, almost up 4.3%. But a couple of stocks from the broader markets which have touched their 52-week high, from the likes of Panama Petro, that stock surged today, Excel Industries, and also Zandu Realty. All these three stocks have seen substantial gains, and most of them are trading almost at days high. Look at that, Excel Industries sitting with gains of 16%, and Zandu Realty also registering good gains of almost 13%. Well, with that, it's a wrap on this edition of Trend Spotting. Don't go anywhere. Coming up next is Hot Money, so stay tuned to Bloomberg Quint Live.